since 2015, you guys have helped your clients save around $1 billion.
Every single one of my clients, I have thousands and thousands of active clients, has a 0% interest rate effectively or less.
How do we back up the promise of like helping people save money?
Even if you study absolutely everything, you read the student loan law treaty cover to cover, that's how it should work. And how it actually works is totally different.
If you're watching this, maybe the goal shouldn't be to pay off your loans as fast as possible.
That little trick could save you 100, 200 grand.
Zach Geist, founder of Student Loan Tutor. This is what I'll say. If you have student loans, or if you know someone with student loans, you should probably tune in and listen to this. This could be the most impactful video that you watch this year. And that's a bold statement, but my hope is, Zach, you can help me back that up. Welcome to the BetterWealth Show.
Thank you for having me, Caleb. Yeah, and I would add to that, if you're in any type of profession that works with people who have federal student loans, and if they didn't have federal student loans and you could be the reason that they don't, or significantly reduce what they would normally have to pay to service those loans, and if you're in an industry like a financial advisor or an accountant, or a mortgage broker, real estate agent, or anything where that would benefit you, then you should pay attention, even more than the people who have federal student loans.
I love it, man. I love it. So to date, and I just want to I want a little bit of background of your story and what is Student Loan Tutor, but then I really want to get the framework of like, okay, how do we back up the promise of like helping people save money? Because to date, since 2015, you guys have helped your clients save around $1 billion, maybe just under $1 billion of money that they didn't have to pay for their student loans. And that's over 10,000 borrowers. And so it's not like you guys are, open up shop yesterday and just have this idea. Like, you guys are, as far as I'm concerned, the leading company when it comes to this. I've heard from so many great people. You guys were kind enough to be a part of an event that I put on for advisors, and there were so many people that were like so fired up because it almost sounds too good to be true. And the reason people love you is they literally work with you and you help them put more money in their pocket. And so, I wasn't born yesterday. Whenever you can help people find more money that they don't have to pay, their lives get more rich. And obviously, being in the space that I'm in, extra money means compounded future benefit for whatever you want to do. And so with that can sound good. My hope is by the end of the show, people, number one, know a little bit more about your company, but more importantly, know the framework of how you guys help. And then obviously people work with you because they can't do it on themselves, or you guys can do it better. And I think it would be awesome to realize like why people work with you. And so I know that I'm asking for a lot, but I'm excited for our time together.
Well, the good news, Caleb, is that there is in fact a rabbit under my hat. And in fact, I'll let whoever wants pet the rabbit, and they could feed it a carrot if they'd like.
I don't see a hat, so we're off to a bad start here, but let's roll. Maybe there's a rabbit under my hat, so we'll see.
Maybe there. I'm not so sure, but definitely under ours. I say that, the magician metaphor comes to mind because, yes, whenever you tell somebody that you're able to, essentially that you're selling money for less money, right? If I'm selling, $100 bills for $1 and I'm able to provide evidence that I'm able to do that, it sounds by definition too good to be true. And if somebody was doing everything correctly, then it would be too good to be true. But the fact is that the labyrinth that is federal student loan repayment, if you're paying attention, or if you take even a moment to do a Google search, you'll very soon discover that there is a labyrinth and it's very difficult to navigate. And as the old myth says, Ariadne, has invisible thread or invisible yarn, and we know how to navigate that labyrinth. We've done that as far as I know. You are correct. As far as I know, we're the largest private organization, helping high balance borrowers manage their federal student loan debt. We've been doing this for over 10 years, almost 10 years as a company, but I've been doing it even before I formed the company. And my initial plan was to create an information product to help people do this themselves. And charge for the information product and potentially develop software. And you might wonder where the hell that product is, or where that software is, or why nobody's designed the software. And it's very simple. The reason nobody's designed the software is because it's extremely high touch. And the reason that it's extremely high touch is not because, well, it's difficult, but you could program algorithmically pretty much any difficulty that you could imagine. But that doesn't account for human error, right? So the challenge is that the 49 million student loan borrowers, give or take, need to be managed by someone. And these federal student loan borrowers are being managed by something called servicing, federal student loan servicers, which are essentially they're private companies, except for one that's a for-profit, Mohila, that's most likely going to no longer retain their contract, that is doing work on behalf of the Department of Education, which is a federal agency, right? And they're not actually a collection agency because they're working for the government. So they get a lot of carte blanche. And the challenge with all of this is that the quality of person that they're hiring there to manage this entire financial labyrinth is very low. These are when you're hiring people to manage this amount of federal borrowers, 49 million borrowers. Think if you have financial advisors and you have a firm and the firm is managing 49 million borrowers from all across the country, how much training would it be to be able to get that person adept to be able to handle complicated financial questions like how much of this loan should I service? How should I document my income? How should I reflect my loan balance to my mortgage broker? How much should I save for the tax implication? When is the tax implication due? Like, should I take this job over this job? Should I file married filing separate or joint? These are all questions you have to know the answer to in order to manage your federal student loans effectively. And you're getting that information, if you're the average borrower, which 99.9% are getting this from a federal student loan servicer agent that has had absolutely no financial training whatsoever. So I have very stiff competition, as you could imagine, with these people. It's a joke, right? I mean, and it's not my opinion that they're not doing a good job. In 2019, the National Consumer Law Center did a report where the Inspector General proved that there's a 61% error rate. That means if people are doing everything correctly when it comes to filling out for their income-driven repayment or consolidation or whatever it is that they're trying to do, document income, that there's a 61% chance that they're going to mess up.
Wow.
The servicer is going to mess up. That's if they do everything correctly, which most of the time they don't do that yet either. And if you take that and you span it over 10, 15, 20, 25 years, the chance for error is almost 100%. And by almost 100%, it's not 99%. It's like 99.9999 something percent. You could do the math. There's people that are better with math than me to tell you exactly what the chances are. And so all of these servicers operate differently. All of the servicer agents screw up or don't screw up. So this is why no student loan software that's been effective has ever come out. This is why I didn't develop it. This is why the information product didn't work, is because you have to plan for the incompetence of the federal student loan servicer. And so the good news is that it is inside of the complexity that is federal student loan planning and repayment is a very lucrative opportunity to do this in a way that maximizes savings. And I'm going to say something that's very important here, and that I hope people are listening, is that every single one of my clients, I have thousands and thousands of active clients. Every single one of my clients, and they're not unique, has a 0% interest rate effectively or less. I'm going to repeat that. Every single one of my clients, which is a very large sample size, has a 0% effective interest rate or less. So if you don't have, or your client doesn't understand how they have a 0% effective interest rate or less, that means a negative interest rate, then they are doing something different than what we're doing.
They're overpaying.
Or they're a unicorn. And they happen, right? I mean, occasionally I don't have a client. Someone comes in and they're making so much money. And I have clients that are surgeons and orthodontists, veterinarians and lawyers. And most of my clients are doctors, people with graduate degrees, right? With businesses, with employees, with staff, right? Deep into their business. And I'm still able to get them an effective 0% interest rate because of the forgiveness windows that are put into place and interest subsidies that come into play when you're not even servicing the interest, where some of these people have very high balances, and that's possible. And this is complex planning. So, but there is a way to navigate it. And then it comes down simply to, what are you going to pay if you do your current path and you figure out what the interest rate is? A lot of people service this debt traditionally. They just say, what my stated interest rate, what's actually on the loan? It's 6.8%. Grad loans right now are over 9%. That's crazy. That's crazy interest rate, right? Yep. But they look at that and they misunderstand that that's their interest rate. That is their stated that's their stated interest rate. Their effective interest rate is not, it can only be done, it takes us 90 minutes to do it, right? We have to look at all of their loan types. We got to look at their income. We got to look at how it flows to them. We got to look at their tax filing status. We got to look at their taxes. We got to look at how they could adjust, how they could, how they could adjust their income, what type of investments they can make to bring their income down, which there's ways to do that. By changing the way that you invest, you could actually bring your income down as it pertains to documenting income for your federal student loans. So you have to do all of this to understand fully what their effective interest rate is, because then you have to calculate, when is that loan going to disappear, how much interest is going to accrue over that time, how much money is going of those payments, if there is a payment, is going to service interest. And if any interest that does accrue, if SAVE continues on and they're in that plan, there is no interest accrual. So any interest that you're not paying doesn't accrue and become part of the principal.
Yeah. Well, so I have a lot of follow-up questions for you.
Yeah.
I'll just say, if you're watching this and you're like, wow, like Zach's way too passionate for such a boring topic, you're not alone. Yeah, you could comment in the comments your thoughts so far. I love it, by the way. If you're a consumer, you have debt and you want to learn more, we'll have a link for you. If you're an advisor or you work with people and you want to learn more about this amazing company, we'll have a link for you. So we got you from a standpoint of information. So what I want to take a step back on is, number one, in 2015, did you have this epiphany, or like, no, you didn't come out of the womb being like, I want to help people pay off student debt? Where did this passion come from? And then I'm hoping, and I've never dealt with student debt for myself personally. I've had many friends, we've had clients, and it's crushing. It's horrible. And so I would love to know, like, the framework start to finish. But before that, I want to know, like, so you want to do the software, but then you're like, okay, we actually should just start a company helping people because of the incompetency and that it would just almost be impossible. Like, I could tell you what to do, but you're just not going to do it. But where did you even get inspired to even want to do that? Is there a personal story behind that?
There is. I grew up quite poor in the Oakland Bay Area, and I was 18 and I was selling used cars. It's the one job I could get. I had like broken teeth, and I grew up poor and kind of the hood, really. And it was a rough upbringing. I remember I bought used suits at a thrift store. It was like you get half off on Tuesdays or something. I was wearing like turquoise and maroon suits that were like four-size. I just had no concept of how I should dress. And this is me at 18. Just turned 18 too, and I was selling used cars, and I just wanted to like get out of the ghetto, as pretty much most rap songs would talk about. And I thought maybe college was that pathway for me or something, and I really wasn't sure. And it doesn't give you much time to go to college when you're working bell to bell selling used cars. There was a woman who came on the lot one day, and nobody wanted to take her. She had her daughter with her. Her umbrella was kind of broken, and she was looking at some different cars. It was raining, and nobody wanted to take, so they figured, she probably can't qualify for credit. And so I ended up saying, well, what the hell else am I doing? I'm just sitting here. So I went out there to talk to her, and I noticed she just seemed a little unusual to me. She was carrying a Kelley Blue Book in her hand. This was 1998. And I ended up talking to her. She wanted to look at a Toyota Tercel. Most, young women that were like her, as I would imagine, would come after like the nicest car that was on the lot. It was actually the best price car on the lot. We sat down and we went over the little Foursquare thing. And she's like, I'm already pre-approved, which also didn't happen in Honda of Hayward, where I was working on the used car lot. And then I said, well, they're going to ask me what you could pay and all of this. And I said, what's your income? And she's like, it's irrelevant. I told you I'm already. And I said, they're going to just send me back there. She goes, it's $10,000 a month. This is in 1998. And so I'm like, what the heck is this 27-year-old girl making $10,000? I'm like, what do you do? At this point, like you, I just didn't care about selling the damn car. I wanted to know who this woman was and why she seemed so alien to me. Like, out of all, I'd been there maybe 6 months already, and nobody had ever come up and kind of like tripped me out, like, gave me a glitch in my plan, And she's, I pressured her, and she said, I buy real estate. And I said, what do you mean you buy real estate? Like houses? I had no concept. Granted, like there was no podcast back then. There was no real internet or anything. I didn't know any people that had money. And she said, yeah. And I said, well, can you teach me? I'll come work for you. I was always very ambitious. And it took that to get where I'm at today, really. And she goes, no, I can't teach you, but I can. And I was like, well, where do I go to learn this? What classes do I take? There's no classes. And I said, well, what do I do? And she goes, get this book. It's called Rich Dad, Poor Dad by Robert Kiyosaki. And I'm like, what the heck? And so I ended up that night going to Walden Books in the mall, and I bought that book. And the next day I started reading it, and it was a Saturday the next day, and I just read it the whole day. I didn't even take any of the ups. They have the up system or whatever, and I didn't take it. I read that book, and I thought, wow, this gave me so many answers of like how people are wealthy and how people are poor. Because see, I grew up in the Bay Area, and there's a huge disparity, as you could see even more clearly now when you go to places like Oakland and San Francisco. You could see people, it looks like a third world country, which I had never been to at the time. I'd never been to any other country until right after I started Student Loan Tutor. As a matter of fact, I went to India, and I had this idea that my money would last longer, my seed capital, that I self-funded this in the beginning. And I thought this is what I was going to do. But long story short, I learned about active and passive income. I learned about the difference between building pipelines and hauling buckets. And I learned that you got to, it's not even that you get to pay the game. You're forced to pay the game by being born in the United States or whatever country you're in. It's a different set of games. It's a different set of rules. I was playing the game of, I didn't go to like some fancy colleges or anything. I didn't have people that I grew up around that knew a lot. So I had to be an autodidact, right? I had to read books and learn things and network and meet people. And some people would say good things that were really helpful. And other people were trying to sell me a bill of goods, right? And I had to learn how to be able to navigate and figure out what's right and what's wrong and how to navigate the systems of money. And there's a very big difference between knowing how to make money and knowing how to make money with money. And these are two very different skill sets. And there's a very big difference between knowing how to keep money and how to navigate the systems. And one of them is tax and tax strategy and planning entities. These are important things. Marketing is a big piece. If you're going to run a business, you'll understand how important marketing is. And what you have to learn, at least what I learned very quickly, is I got to make sure that that I keep as much water out of the boat as possible. And debt is water coming into the boat. And if you've got student loans and it's one of those things that I figured, gosh, people are all complaining that they can't solve this problem. And I was like, there's like all these, some people are saying loan forgiveness is real. It's amazing. I pay nothing. And other people are like, loan forgiveness is a scam. It's not possible. And all these companies are a scam. And then no, the servicer could help you, but no, they can't. And then it was just a crazy landscape. And so I decided to get into the business. There were some crazy, magical, blessed synchronicities that happened that if I don't give any backstory, it will just make me sound crazy. But just trust me that there was, if we ever meet in person, I'll tell you the story. There's multiple things that have happened. And, I like to say that we've been like the Jenny Shrimp boat. There's been so many companies that go out there, maybe well-intentioned, some of them, and maybe some of them are scams. And maybe some of them look like scams in the end because the entire landscape pretty much makes doing what I do virtually impossible. And it's not traditionally the demographic that someone that has a lot of financial acumen would get into because it's not very profitable to work with people who are in debt. By definition, people who are in debt don't have a lot of money, which is why people in finance traditionally go after people with a lot of AUM, assets under management. They don't go after these. And like I say, a lot of my financial advisor referring partners really like working with Student Loan Tutor because they're working with these people who are doctors and lawyers early on in their career and establishing that relationship with them when they're still early in their career, and they're able to deliver something immediately. They're able to say, boom, look, you know exactly what your effective interest rate is now. You know you're not paying your stated interest rate. You know you're redirecting your cash flow. You know what that cash flow is doing. You're learning about finance. This is a financial initiation, and that's what I love about Student Loan Tutor. So in some ways, I would say I'm someone who works in the place of financial initiation. And I think a lot of financial advisors, if they work with new people in finance, if they really took that sacred role of understanding that they're really initiating people into an esoteric art that is finance. And in ancient Greek times, I'm going to Greece, headed out tomorrow to go on a pilgrimage across Europe. But some of what I'm so fascinated by is the origins of our monetary system and currency that stemmed from Mesopotamia and Greece. And if you look at it, there were, entire mythologies and, godlike powers that were behind these. And we could feel that presence. I mean, look at what finance has done in the world, both beautiful and chaotic. I mean, it's had a huge impact. And I think people just really having the lack of hubris. Hubris means like kind of this, there's a lot of definitions for hubris, but kind of the traditional definition is that it's a pejorative, and it's a feeling more like more than you really do. So really understanding that if you came from debt, it's likely that you don't know a lot about the money system because your perspective is myopic. You have a very small perspective. And if you're in finance, maybe you have hubris where you think you know everything about student loans already. And we humbled virtually every financial advisor. You very well, and it's a heuristic, right? You may know more about finance than me, potentially. But it doesn't necessarily mean that because you know more about finance, you understand more about the labyrinth that is student loans. And even if you study absolutely everything, you read the student loan law treaty cover to cover, that's how it should work. And how it actually works is totally different. What did Mark Twain say? He says, it's not what you don't know that'll hurt you. It's what you know for sure that just ain't so.
Yeah.
And that's the case with federal student loans, I promise you.
With that, I feel like that's a good... I feel like there it is. I feel like we now should do a deep dive on tell us about student loans, and let's do a masterclass on this. Let's do a deep dive, because the people that watch these videos, the people that listen to our podcast, they want to learn. And so here's the masterclasses on student loans and maybe how you can get some forgiven and all. And so with all that, I know that this is very political. We talked earlier on one side. I'm
walking a tightrope over here.
No, and so no, we're just assume this. Just assume this. Here's what I'll say. Okay, as someone who's conservative, okay, I'm gonna let me say this a different way. It is what it is. Okay, we can complain all day long. I can think the tax system's messed up, but I'm going to use the tax system for the best way to benefit myself and my family. I may disagree with what is possible out there with student loans. We could agree on an economic level. This may or may not be the right thing. At this point, I don't care. I want to know the very best thing that I can do to be efficient and optimize my own personal life. And if you're watching this, your own personal life. So just so for all the comments, you can still comment. I read everything, but we don't care about economics, the election right now. We're talking about what you can do if you have student debt, or if you know someone with student debt, what they need to know and how they can essentially put more money in their pocket. With that, Zach, why don't you give us the framework? Assume we know nothing, and then let's build from there.
Okay. I don't think I'm going to be able to do a whole masterclass on just this one thing. There's so much here. I do want to say, though, something on the political front, because I know that we think this way now. No matter what we say, we're wondering what the political leaning is. We're approaching an election here coming up, and it's interesting because as a company, we have more clients who are conservative than liberal, which you may find surprising, and the negative comments that I generally get, especially on Facebook, is almost exclusively from conservatives, where they're like, pay your debt. You took out this loan, pay it, right? And which I think is kind of, I'm not here to make a moral or ethical decision for anybody. That's ultimately your decision to make. I just want to point out that all of the plans that we work with have passed through Congress. It's not like I'm here inventing these things.
I understand.
I'm not like, there's no Zach Geist plan.
Yeah.
I'm navigating. I can only paint with the colors that have passed through Congress, right? So
and anything the government does, it's complicated to say the least. So yeah.
But and a conservative note, I want to quote a conservative. I won't even name who it is. There was a president once, before they were president, in a debate with a woman who was also running for president, and he said, and you might be familiar with him, she had said to him, well, you don't show us your taxes. You show us your taxes. You don't pay enough taxes or any taxes. And he goes, that's because I'm smart. He interrupted her and said, this is actually true. I used to quote this because I heard it and I hadn't verified. I was like, I hope I'm not spreading fake news, but it was actually said. And so it goes back into something that we say, and it's the beginning. It's the seed element of this. I mean, I think it's the beginning of the journey. And the beginning of the journey for me is, and it's a quote that I used to say quite often, is I said, when you're forced to play the game, it pays to know the rules. And I think that that's the big thing, is that people are playing, frankly, the wrong game. They think they're playing tic-tac-toe, or they think they're playing checkers, but it's chess. And it's chess with the other person's cheating on the other side, right? So student loan tutor is the AI version of a person with AI checking and making sure that that's not happening to you and it's going through. So that's the important piece. But let's talk about student loans. So federal student loans, it's a big deal. There's 49, give or take, 49 million borrowers, right? There's 1.7 to 1.9 trillion. The number's all over the damn place. We don't even know how many people are in default. The number jumps around from 18%, but what is counted as default? Once they're in their default for long enough, they're no longer considered default. You hear stories of you can't bankrupt federal student loans. That's partially true. It's difficult to bankrupt federal student loans. Otherwise, a good strategy would be to go get a bunch of student loans, then declare bankruptcy before you start your practice, and then start your practice. That would work really well. It's mostly true. Like most of what's out there is there's some truth in it, right? Mm-hmm. And that's what makes the professional different from the novice, is their ability to navigate nuance. If it was super simple, there would be no professional needed by definition. Right. So I guess maybe that's the piece to start with. Some things that I think is important for people, anybody that's listening to this call that's a financial advisor or someone that has federal student loans or knows someone that federal student loans, is to understand that for virtually everybody, if you're navigating this correctly and you have if you have over $75,000 or more of federal student loans, that it pays to wait out loan forgiveness, which is a varying amount of time depending on your situation, right? Do you work for a nonprofit? Have you founded your own nonprofit that you're now working for and there's a board, which people can set up, and many do. And if that's the case, or you're working for the government, there's a 10-year forgiveness window, which means you make payments for 10 years, you service the debt, and at the end of 10 years, it's forgiven and there's no taxes due, and that's called public service student loan forgiveness. A lot of people confuse that with the loan forgiveness that's built into all federal student loan repayment when it comes to FEO loans or direct loans. FEO loans are an old loan type, and direct loans are a new loan type. Ever since, I think, 2010, direct loans came in. It might have been 2008. I can't recall off the top of my head. A lot of numbers floating around and dates these days, especially with loan freezes and unfreezes, right? We're in a crazy time right now. Right now, there's a plan called the SAVE plan. Maybe I'm getting ahead of myself. I am. So I'm going to rewind. So the first goal is to figure out, do you qualify for 10 years, 20 years, 25 years? Figure that out. That's the first step. Whether you're going to have us figure that out for you or you're going to figure it out, that's the first step. You got to figure out what your stated interest rate is. That's what the interest rate is with all of your loans, because you probably have multiple loans, right? You might have graduate loans and undergrad loans, and those have different interest rates, right? Grad loans right now, I think, are at over 9%, right? So really high.
And just to be clear, we're just talking about federal student loans. You guys don't touch,
we're just talking about
you guys don't touch private student loans.
We don't.
Okay.
We don't.
So
no.
So just to set, so we have over 49 million borrowers for federal student loans.
Federal student loans. And growing.
And you're saying step number one is to figure out the forgiveness period. Step
for your specific scenario.
Okay.
Yeah. I mean, it depends when you borrowed, what plan you're in.
So the second thing is to figure out your actual stated interest rate. There's lots of different loans there. It's my understanding that it's more complicated than just seeing what their stated rate is, because you could have multiple different loans and they could be weighted differently. And so just to be...
Yeah, and there's actually, you could look and it will see, if you go to you're going to consolidate them, you could see it. It adds them all together and it adds 0.10 to the entire loan amount. Okay. And so that's what it will be.
And then the third thing is, what's the third thing?
Well, the next thing is you really need to figure out, and this is where things get this is where it sucks, because this is where it navigates into a whole crap ton of pathways, which makes it difficult for concision to exist, right? It's hard for me to be concise here. Is you need to figure out what your effective interest rate is, right? In order to maybe to do financial planning, right? Like imagine I'm about to make an investment,
I know, that
right?
Makes sense to me. That makes sense to me. What is the average effective interest rate of someone coming in before they work with you guys? What is it? 9%, 6%?
They don't even know.
Yeah, but
first of all, they don't know.
Yeah, but here's
what most people think.
Yeah, they don't know, but do you know what is the average effective interest rate?
I to be honest, I haven't ever tracked it.
Okay.
I don't. I mean, I could look and we could do an average piece out, but it generally what it is it's the equivalent of somebody riding the brake and the gas at the same time. Like, what generally people do is they figure out their stated interest rate is. They figure out, okay, this is all my loans together. I'm at a 6.8%, right? And then they go, crap, I qualify for income-driven repayment. And then they get into whichever one happens. They hear from their friend or some Reddit post. They're in IBR and they sit in that for a while, or then they go to repay and they sit in that, and that becomes save and they sit in that and they go, well, I'm in that right plan. But if you ask them, what's your effective interest rate? I could tell you that 99.99% won't be able to tell you. It's because they've never calculated, because they don't even know. They're navigating this the way that someone navigates paycheck to paycheck thinking.
I understand.
Right? They're just like, I'm going to qualify for this payment. What is it going to be this year? Normally they're linking to their taxes and they just get whatever payment. There's a part that says, put me in the best plan. They click that and they get put in whatever plan that is. And they think they're doing everything right because they're like, I'm in income-driven repayment. I've got direct loans. I click the best plan. Hooray. And how often are they doing everything the best way of people that call us? At that fragment moment in time, probably in the single percentile.
Wow.
9, 8, 7%.
Yeah.
And they're doing it right then. And it's just like the blind squirrel thing. It's like, that happened to be the best thing at that moment in time. And like the chances of next year, the following year, that remaining the same is going to shrink. And the reason they're doing it the right is because their income is probably still really low. They're early on in their practice. They just graduated. So it's easy to get a low payment or a $0 payment.
Understood.
And then as your income grows, it's harder and harder. It's like taxes, right? Like, should you hire, there's a guy who does taxes for Robert Kiyosaki. I think his name's Tom Wheelwright. It's actually related to a guy that works for my company, which is pretty wild. But should you hire his firm to do your taxes if you work at Starbucks or even at, you're a high-level exec at Microsoft? No, but if you're making millions of dollars a year, you should, right? Should everybody look at working with student loan tutor if you've got $40,000 or $50,000 federal student loans? No. But if you've got over $100,000, you're absolutely insane not to. If you know we exist and you don't, it's just throwing money away, because you actually will do that math for you. That's what's coming up with that effective interest rate. So you have to figure out,
I get the point. I get that this is tricky.
How do you get the payment as low as possible? Right? So the goal is, how do I pick the right plan? How do I get the payment as absolutely low as possible? How do I understand what my interest subsidies are? So like, is the interest accruing in this specific plan or is it not? What's happening to interest I don't pay? When is that loan forgiveness time actually happening? And what's happening with my income? How am I? My business doesn't owe this loan. I owe this loan, right? How do I document my income to qualify for my payments? What's the discretionary income calculation on the plan I'm in, right? Save right now, which is one of the repayment plans. It used to be revised pay as you earn, right? There used to be a plan called pay as you earn, which is why there's a revised pay as you earn. And now for a while there was no name, and I called it the revised pay as you earn. I mean, it's getting absurd. So there's this plan called Save, and right now it's in the Eighth Circuit Court. It's waiting for now it's waiting for the Supreme Court to get out of recess in October. So right now, anybody in Save, their payments are frozen, and they can't make payments, and there's no interest accruing, but none of the payments are qualifying for loans for loan forgiveness. So, the thing is to know, what's the repayment plan? How do the interest subsidies work? How am I documenting income? What are my tax filing status going to be, both now and over the life of the loan? What are my household size, and how do I make sure I'm maximizing? That's a different calculation than it is for the IRS. And then, when is my is there a tax implication for me? And if so, when is that happening? And do I want to extend that, right? Because that's a tax event that's going to happen. And if, a lot of our clients on average have over $250,000 of federal student loans, right? What's that going to do to your income when that hits you on a big income year?
Yeah.
Right? You got to plan for that. It's a financial plan. Now, if I'm not servicing the debt, what am I doing with the money that's not going to service the debt? Am I buying more liabilities? I love Robert Kiyosaki's, cash flow.
Let's put it.
Don't buy two dads.
Let's pause that, because I don't want to skip over. So, is your goal to have student loan forgived, or to bring the payment down as low as possible with an effective 0% interest rate, and then save the difference? Or is it just? Let me ask one more question. Is it to bring down the loan to 0% effective interest rate, bring down the payment as low as possible, and then have that be forgiven sometime in the future? Is that
all three?
okay?
Ideally, all three.
So just so I can get a framework.
And that's how it's helpful. It's a helpful question. That is how the effective interest rate would be calculated, because you would look at, well, what are they paying now to service the debt? If it's zero, they're not servicing it, right? What's the interest accruing? Some plans, like Save, accrues 0%. You don't accrue any of the interest you don't pay. Doesn't accrue. Revised pays you to accrue half of what you didn't pay, right? And the last thing is, when is it forgiven? And depending on when it's forgiven, what is your tax rate at that moment in time? Until January of 2026, there's no tax implication for any forgiven student loan debt, because Joe Biden put that into place right when he got into office, because the whole COVID thing and everything else.
Right.
So, if you got your loan forgiveness on December 31st in this situation, and your neighbor got their loan forgiveness on January 1st, your neighbor's screwed. You're totally in the clear, right? I mean, that's how student loans often work.
Yeah.
There was something called the one-time IDR account adjustment. I don't know if you even heard about that, but essentially it was an attempt to fix the disaster that was the federal student loan system for the last 20 years. And they said any payments that could have counted back, go back 20 years, if you take all of your loans and consolidate them into a direct loan, we'll go back and we'll count all the payments that could have qualified as qualified payments. And some people won the freaking student loan lottery on that. And I mean, like, the equivalent of the lottery. I had a client, she did a testimonial for me. She had one undergrad loan from 1996 or something for like a couple grand, and then got graduate loans, had like $400,000 of federal student loans for graduate loans. And because that thing came into play and those loans weren't paid off, she consolidated them. She didn't. We consolidated them, and all of her loans went away. No tax implication, over $400,000. Forgiven.
Wow.
Now you'd say, well, what about if she had paid off those student loans way back in 1994 and didn't still have them? What would she owe today? 400 and something thousand. You're like, well, wait a second. You mean she got rewarded for not paying it off?
Yeah.
Student loan lottery. And then this is why I get attacked. People are like,
yeah,
I can't believe you would help people do that. I'm like, hey, if people want to invest in what, as a financial advisor, if somebody wants to invest in something, you say like, hey, this is what you want to invest in. The god Hermes in the ancient Greek.
The same point was made. Like, people in this whole student loan forgiveness thing was all talked about. People were like, I paid off my loans it's not fair, which I understand what they're feeling, but it's like, maybe if you're watching this, maybe the goal shouldn't be to pay off your loans as fast as possible. Sorry, Dave Ramsey, but maybe that's
so good.
But it
makes you feel good. Somebody's overpaying on a federal student loan, which I see. Virtually everybody that my client, I haven't been client facing for like 7 years. My staff, we have over 40 people on the team. But it's a very difficult moment when you look at their situation and you say, hey, if you continue to service your student loans, this is what you're going to pay over the life of your loan. With our strategy, this is exactly what we're going to do. Here's your exact loans. Here's what you're going to pay if nothing changes. We have to run that forecast year over year, right? Because you have to recertify every single year. So that number, that effective interest rate is changing. It's dynamic as your life changes.
So you're just because I'm this is new for me. Someone comes to you, and again, like we'll talk about ideal clients for you in a second. Someone comes to you.
Sure.
The goal is to bring the effective interest rate down to zero or negative. You're not really doing anything about the balance currently.
Well, because even if they have an interest rate now, even if they're paying to service it, they're not necessarily at a 0% interest rate at the moment.
Understood.
But their effective interest rate would still be zero or less.
Okay.
That's what I'm saying.
And then,
there's still people servicing debt. But even if you're paying $500, $700 a month on a $3,000 a month debt, you're not even paying the interest, and you're still getting it after the forgiveness and the tax implication. When you pay the amount, you're still under 0%. You're not paying back even the principal.
Okay.
Right.
And I'm trying to track here, and then the payment is going to be smaller than what they're currently paying. Is it right?
The payment is going to be smaller than they're currently paying.
But they're still paying something. And then the idea is...
Some people are. Yeah. Some people are. Many people are not.
Okay, so some people can come to you and not have to pay anything.
Correct.
Okay, that's interesting.
Many.
And then the goal for the future is to get their student loan forgiven. And I'm way oversimplifying it, but is that the goal?
Yeah.
to get it.
That's the goal.
And so it's like
Yeah.
your theory is why overpay on something? Like you're actually shooting yourself in the foot by overpaying.
Yeah, I mean, Dave Ramsey, he says, pay off your highest credit cards first, and then your lower and then lower and lower. If your student loan is at 0% or less, how much money should go to service that loan?
0.
If you don't have to service it, you shouldn't service it.
Yeah.
It's that simple.
Yeah.
Do not service if a $0 payment is adequate to service that loan, and there's no interest accruing from the 0% interest. I know you get it, but people, it's a crazy thing.
Yeah.
I mean, it's like crazy world.
Okay.
It's like we go into Toontown when we start talking.
Let me
about
ask you this,
things.
and I'm sure you have an answer for this. Okay, so
sure.
How much debt do I need to have in federal student loans to be a good candidate for work with you guys directly?
$75,000 or more, it just becomes a no-brainer at that point.
So it's fair to say if I have $75,000 or more, if I know somebody that has $75,000 or more, they should work with you. Great. There's links down below. Here's my challenge.
Yeah.
If I have less than that, what can you give me something that can help me from a standpoint of like, hey, I have 50,000. Maybe it makes sense. Maybe it doesn't. I'll let them make the call.
Yeah, I mean, what I think what you do is still call us. We have this cool thing where we charge $150 deposit to meet with us, and if we can't show you how we could save you money, like if we're just like tell you the same thing you already know, like we'll give you your $150 back. You just get it back.
Okay,
that's like
my question is, and that's great.
The other option is the other option is you pay $150, you learn some stuff, and you go do it yourself. If you have less than $75,000, it's a pain in the butt. You got to follow up with the servicers, make sure they don't screw up, which they do. And then when they do screw up, you've got to call them back.
Right. Which you guys do that all for people. But my question is there something, and again, I understand, like it's like almost asking, is someone asking me like, what's a tax strategy that I should implement? It's like, listen, I don't know, but I can tell you some of the things that I would look at. I would make sure that your entities are dialed in. Are you doing the Augusta rule? Can you pay your kids? Blah, 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 blah.
Yeah.
Like, I
would make sure you understand your family size and making sure that you understand what your family size is right now. Like expectant mothers also increases family size. Someone living in your home that's not related, who you're helping support 50% or more, is also part of your family size. You need to figure out whether you want to be married filing separate, the tax laws for married filing separate. Usually you don't pay that much more if you're married filing separate than if you are married filing joint. And generally what you could save on student loans will benefit you. You need to run those numbers and make sure you know I can't give tax advice. I'm not even licensed to give tax advice. I have someone on the team that is, but you do want to tech with that's why it's so beneficial to do it all with one place, because we do all of this. You also want to figure out and make sure that you're in the right repayment plan. For a lot of people, this is going to be saved. But again, not for everybody, and not everybody qualifies for SAVE. You might have Parent Plus loans. If you have Parent Plus loans, I have a viral video. It's like over 1 million views on TikTok right now. If you have Parent Plus loans, you need to hear what I'm saying, because you could not have Parent Plus loans anymore, which means you could qualify for SAVE instead of the best IDR being ICR, which is 20% of your discretionary income based on not 225% of discretionary income over the poverty line index, which means that it's a ridiculous amount of saving, and there's a loophole right now. It's called the double consolidation, where you take whatever you have to have loans that are not all consolidated already, and you consolidate them with 2 separate companies, servicers, separately, but you have to do it staggered at different times using paper applications, and then follow up, make sure you have it done. Once it's all complete, then you consolidate them together, and it removes the Parent Plus tag. It's a total pain in the ass to do. We do it for clients. It takes about 6 months to a year of following up. We do it because we have so many people in this process.
Yeah.
But you can do it yourself. And if you have Parent Plus loans, that little gem probably save you, I don't know, depends on how much loans you have. That little trick could save you 100, 200 grand.
Well,
and we might say, well, that's not supposed to be how it works. The Department of Education has acknowledged that that's there, and they're saying, I forget when the loophole closes. I should know. There's so many dates. I should just have like a little reference key here. Again, I'm not meeting clients, but the window does close. I think we're stopping doing this in January 1, just so we can make sure we get it all done. So at some point of next year, that it stopped. Anyone on my staff would be better to talk to.
I understand how that works. Zach, thank you. Number one, I think my biggest takeaway is this is a headache. And congratulations on creating a company that helps people navigate the mess of that student loans are. I love the fact like anyone can get my attention by saying, hey, Caleb, I can help free up cash for people. And I think if you're watching this, you have student like this is great. I'm a big fan of like frameworks and understand, and I know a little bit more, but there's a lot, it's complicated. And so I guess, is there anything more that you would say that would be like, hey, this would be really valuable to know? Anything in the future that you guys are looking at? I also think it would be great to have you guys back on, and maybe we take like a
never refinance until you call us.
Okay.
Like
refinancing student loans you could shoot yourself in the foot.
Never refinance your federal student loans. I shared with you at the beginning of this that all of my clients are at a 0% effective interest rate or less. Again, they're making payments, but some of them, many of them, I'd say probably close to half of my clients have a $0 payment. I mean,
and the reason you don't want to refinance is like, if you refinance student loans to like a private bank, you're totally screwing yourself.
Totally.
Yes.
Yeah. All of these interest subsidies are gone. Income-driven repayments gone.
Yeah.
These forbearances where there's no interest accruing, where it's qualifying, it's all gone.
Let me ask you this.
Yeah.
If someone's going into college, you'd of course maximize the federal student loans first.
It is the best money you could borrow. I wish I could borrow money at these terms. I would borrow as much money as I I would take all of the money.
I feel like that's a business in itself. Maybe we should talk offline. Is there a world, guys, I'm not giving investment advice. Please don't sue me or report me. But imagine if you created a university, you hear me on this, and then and it's like an entrepreneurship university. Imagine this. This is actually what should happen. And
I think someone did. I think they ran for president too.
But that would be very interesting. Like, but is it possible for me to get student loans, or is it like you have to go to an?
It has to be federally accredited. But there's a lot of schools that get federal accreditation. I seeing how this whole thing works. I watched this film. There's a documentary film called The Ivory Tower on student loans, and you see just how much money there is, because generally speaking, there's some type of assessment. And this is where I run into like, hey, pay your debt. You took the debt. You got to pay it. But like, these are kids. They're being groomed, right? They're being told you have to go to school or you're a total loser and you'll never get a job and no one's going to care for you. And your parents will think you're a failure and your friends will think you're a failure and never get married, like it'd be way better if a lot more people get into trade schools and things like that. So people are getting, degrees and things that don't convert to money, but yet they're getting charged student loans at crazy interest rates as though they got a degree in something that would actually equate to money, right? So like there has to be income-driven repayment, or schools have got to become way less expensive because they're crazy expensive.
I agree.
You look at what school costs. It's asinine.
No, I agree. I graduated college, but lived at home. It was a state university, paid a total of $21,000 for bachelor's in finance. And so like, I, again, didn't have any debt, graduated in 3 years, worked the whole time. I know I'm a minority in that. I look at people going to college and the outcomes, like from an investment standpoint, it's a disaster. It's a train wreck. I think that there's other bigger problems that need to be talked about, but I just want to reiterate, Zach and I are not talking about what should be. We're just talking about here's the reality, and you're just helping people after the fact. You're not saying that, you're not condoning that, yeah, that was a great investment, because a lot of cases, there's people that go to college that it's a great investment on paper. Like, that's awesome. In a lot of cases, if you really look at the opportunity cost of time spent, money spent, and like it's hard to justify in paper, but it is what it is. And if you're sitting with student loans, you probably have already had these scenarios in your head for much more than what we're saying. And so it's like, definitely figure out the best way to optimize it, and give Student Loan Tutor a call, and we'll have links down below. Zach, is there anything more that you want to say? My hope is to have you back on
that topic. I would say, if you're going to go to school and you're worried about student loans, they're the most benevolent loan you could get if you know how to work with it. It's like how to train your dragon, like you just got to make sure you know how to train your dragon, then they're not so frightening. You could, ride it all the way where you want to go. So I would suggest go to school for whatever, as long as you know what you're actually going to pay and how these things work. The challenge is nobody figures out how student loans work. They just figure, I'm gonna be rich after I graduate, even though all the evidence is to the contrary. I was very careful before getting married. I didn't get married till I was 43. And it's because I heard so many horror stories of divorce and child custody battles and all the stuff, and I said, till I know for sure, I'm just not going to do it. So I'm, conservative in these ways. And I think that people really should look into that. Like, how do student loans work? Maybe you want to go get a degree in something that's just not going to convert into money, and you just know what you're going to end up paying on it.
Yeah, I think my problem is, and maybe this is just the problem in itself, is they're so dang confusing. Because like we talked for 50 minutes about student loans. I understand the issue, but I couldn't give most topics. If I talked to someone for an hour, I could then turn around and give some type of like a framework. And I think this is the problem, is it's so confusing. And that's probably why you opened up the podcast by saying there's almost 99% of people screw up somewhere in the process, and it's dropped and maybe
over a length of time. I'd say,
but I think that's a big, like, that's tough. I'm glad that there's companies out there like you, but in a sense, it's kind of sad that if people don't work with you guys, they're on their own. And so it's like, I'm grateful for companies like that. And it's also, you said there's 49 million people with student.
Yeah.
It's
solvable. It's solvable really quickly. Well, you create. This is something you asked what else I'd recommend. And I've said this, I had a PR company for a while that I was working with, and they were getting me in front of major people like, Forbes. I wrote for Bloomberg, and I wrote for all of these major publications. And what I'd said is I said the same thing over and over again, that, that the Department of Education, the federal government continues to, come down on companies that are arising trying to help people with federal student loans. And the vast majority are either scamming people outright intentionally or unintentionally, because they do everything that they think that how it works. And then the servicer doesn't do it right. And then they don't know how to check up and fix it, and then turn over, and you can't really advertise. It's just a freaking nightmare, right? Like, you go on, it's like, nobody could help you. It's like, it's like Orwellian. No one could help you. This line is being recorded, and if you're not the borrower, it's all this crazy stuff, and the federal government could fix it very easily. They could create a licensure system the same way they do for life insurance and financial advisors and CPAs and lawyers. They create a bar, and then a licensure that has to take place, and these people have to be trained, and they have to carry some type of insurance, right? Errors and omissions, and they have to do continuing education. And then you're working with someone, and it allows the free market to be able to serve the borrowers. Currently, it's like the federal government is like covering their ears and just going, you don't need help, but you do, because everybody's screwing up, and there's no one that could help you. It's a paradox, So yeah, it's totally screwed. And would
you be open to training people to do their own business? Would that be something that you'd be open to?
Like if this was licensed?
Yeah,
like
if someone was like, hey, I would love to learn this and have my own because it's, the fact that you guys have capacity to meet with people is mind-boggling, because there's like millions of people that probably need to work with you guys.
Yeah.
So assuming that you guys are filled, is there a world where you would teach other people all the ins and outs, and then have them be able to serve their own clients?
I haven't ever considered that. Nobody's been crazy enough to bring that up. it's a great, very rewarding business. They would probably want to work with us or like under us some way, and have some, because we have a full-time compliance attorney on staff. We carry a ridiculous crap pile of insurance. We had to build a custom CRM because none of this stuff is tracked. You have to create static dates that are at different times. Like, we tried to use HubSpot and do their custom thing, was, I don't know, $30,000 setup or whatever. And they just couldn't do that one function. So we've had to just build this stuff out over the years. The challenge I think that we run into is that the federal government won't recognize this as a profession.
Got it.
So what ends up happening is it becomes unofficially regulated. So then it falls underneath debt settlement, which makes no sense because you're not settling debt. So you have to abide by all of these laws and rules that just make no sense, which is where the compliance attorney comes in, because every state has different laws as it pertains to debt settlement. And debt settlement's very loosely defined. And there's nothing that's just like, this is for student loan strategy
Understood.
And document, which there freaking should be, right? Create a licensure system, let people get licensed, and then charge them a bunch of money to get licenses in the States. But instead, I've got to have this amount of escrow in this state. I got to charge a percentage in that state. I've got to charge a fixed percentage in this state. I've got to not charge anything till the work's done in New York or Minnesota. And I've got to put this warning for, this state. You got to give this warning and wait 3 days before. I mean, it's just
Crazy.
ridiculous.
Crazy.
So,
yeah.
Unless someone has, a lot of capital to get started, you have to market. The biggest problem is marketing. If I were to start from scratch, like even knowing what I know, I don't think I could penetrate the market. I was able to market when Facebook and these different platforms didn't downgrade the algorithm when you said federal student loans. I was able to just
and you
speak.
think
now
we talked about earlier, like the algorithm. It'll be interesting to see how many views this video gets. But you're saying like that almost like they don't like that because it's very political or it's very like I
think it's just real simple. I think, I don't think there's this big cabal. It's just like, it's easier for these companies to say, okay, whenever someone mentions student loans or they say this politician's name, we're just going to reduce how many people see that thing. And it just goes, I've had YouTube videos get 130 views and that same video gets 1 million on TikTok. And it's the same exact video. So you're telling me like what? And it's both going to viewers in the United States.
Yeah.
Something is up there. It's not, that's an organic reach, right? It's not even paid reach.
Yeah.
So
Zach, this is very entertaining. I appreciate you taking time. We will have links down below. Please comment. And by the way,
I wish I had a panacea I could share right here with you.
Yeah, well, maybe
say,
on a future,
do this.
And you'll keep us updated. That's the other thing is as things change, we'll have you back on. If anything comes up that you think would be really beneficial for our audience, please let me know. But if you have questions down below, please comment and share this video with someone that has student loans. How about that? If you have someone,
or your financial advisor, if you have a financial advisor, share this video with your financial advisor.
I think
I haven't met a financial advisor that has the degree of understanding on federal student loans that we have.
I think it's clear to me that there's a reason why there's a lot of confusion and a lack of knowledge. This stuff is not the easiest to understand. So, Zach, thank you, and we'll have you back on in the future.
Thanks, Caleb.